It looks like it's Blue Shirt Day. You guys got the memo.
Yeah.
It's good. Good work. All right. Let's, before we get this show on the road, let's give it a few minutes for people to join. While we're doing that, we can repost, retweet. Does everybody still say tweet?
I say tweet.
Too.
I say Twitter and tweet. I don't use X and post.
Yeah, I can't. I've never gotten my head around the X thing.
I'm never going to buy X.
Never going to buy X when it comes public again?
Nope. Never going to buy. Well, I never owned it.
What's that?
I never owned the stock ever, even when it was public the first time. So I wouldn't buy it.
Yeah, I owned it. I definitely owned it.
I wonder what would be valued right now.
I don't know.
that
Elon's got. I mean, Elon's got a big run going now, right? And out there in the markets with Tesla going up 40% in a few months or something crazy.
Yeah.
It would be a good time for him to reissue it publicly. So
I got offered stock about 6 months ago, and at the 40 billion or 44 billion or something like that. I passed. Stupid.
Well, it depends on when it goes out, right? So
that's true. Right now,
Musk doesn't have to sell it. He just
the paper value's probably getting close to 80.
I do think it's kind of funny, though, to be honest, that he put it out there like, "Hey, maybe I'll buy it at such and such." Then he's kind of held to it. He follows through and makes it a success. It's really pretty incredible, actually.
Yep. No, don't bet against Elon.
But the fact that he actually
look what he's done with Tesla stock on vaporware, huh?
But the fact that he did that, he went because on his word, he went good on his word. I know a guy, and I hope he's watching this. I hope it gets sent to him.
Okay.
But a guy who is worth hundreds of millions of dollars, and I was golfing with him, and I'm not a good golfer, and I was doing this putt, probably a 30-foot putt. Like, it was an impossible putt for me to make. And I said, "What would you give me the odds on this?" And he's like, "Come on, that's never going to happen." It might have even been more than 30 feet. I go, 100,001 on $1. And he goes, "Okay, done." He says, "Okay, done." And I drain it. Okay, wow. I jump 18 feet in the air. I'm like, "Whoa, yeah." And he's like, "Oh, man." I go, "Seriously, you owe me $100,000. And he's like, "Come on." I go, No. So if one of my brothers and I were golfing and I did that, obviously I'm not going to collect it from one of my brothers. But this guy, he owns a resort.
You can afford to lose that bet. He made it.
Yeah, exactly. And he's a good guy though. So
David, you need more honorable golfing buddies.
That's right.
Yeah, well, I mean, he should never have said 100,000-1, right? He said,
1,000-1 is just has the same impact, and he would have
exactly.
Yeah, would he have paid you 1,000 or 10,000 to 1?
I bet he would have paid 1,000. I don't know about.
I think he absolutely would have been $1,000. And the thing is, if he had sent a case of wine afterward, like, "Hey, great putt," whatever, then I would never tell this story. He's this close to my saying his name too. Really, the only reason
you're holding that chip.
I would do it because I think he'd laugh at it. I think he'd actually be, but I'm not going to just because.
I stiffed somebody on $100,000 one.
Did you really?
And I'll say his name, John Bon Jovi.
All right. So you were going to hire him for a concert?
All right. What was the bet?
And you didn't?
No, I wasn't going to hire him. It wasn't a bet. We were out drinking after a show. We both got obliterated. And I told him, I'd send his foundation a check for $100,000
okay.
that night. And his agent called me the next day looking for money.
Oh my
I,
gosh.
I said that was contingent upon him.
His agent wasn't that drunk.
Acoustically in my backyard for an hour. He said he doesn't get out of bed for $100,000. Sorry, Robert.
Yeah, but to be fair, you were drunk. He was drunk. I don't know.
Yeah.
I'll give you a pass on that one.
His assistant wasn't drunk. Taking notes. All right, let's get this show on the road, gentlemen. Welcome to Wall Street Beats. I'm Steve Lamar. I'm joined by our pro, Robert Marcin. He's going to cover some updates on a few of his small cap value positions. And David Maris, our healthcare, pharma, biotech. How long have you been doing this, David Maris? A long time.
25 years, we'll say. Something like that.
25 years.
You're young. I've been doing it 43.
Okay, so suffice to say, we got some gray hair. We got some gray hair on the show, or no hair in one position.
That was an easy one. An easy one.
Sorry, couldn't resist. So, did you guys catch any of the Ryder Cup this weekend? I know David didn't because he was out running errands all weekend. You watch golf, Marcin? No. That was a hell of a comeback by the U.S. team. Anyway, it was fun to watch.
I don't watch.
Well, it was fun to watch the second day because they had absolutely no chance of absolutely written off from winning, and they actually made it a game. So that was fun. Anyway, let's get this started. Mr. Marcin, what do you want to talk about this morning? Give us the updates on these two names you're talking about.
I've got two updates. The first one's kind of brief, so I have limited access, but a couple times on the show, I shared my Telebio purchase. That's the company that makes like the plastic surgery, soft tissue reconstruction patches and hernia patches. And they're not plastic and they're not 100% biological, which both of those categories have issues. They're like a reinforced tissue product. So they have it's a product that is biological, but it's interwoven with plastic fiber in order to make it more stable. And
so it's for surgeries. It's like a surgical
for hernia surgeries and breast reconstruction for soft tissue surgeries, including hernias. That's their biggest market. Yes,
got it.
And there's lawsuits.
And the ticker for everybody who's hearing this for the first time is TELA. Is that right?
TELA, yes.
TELA, not TSLA.
TELA. Lawrence, yes.
Got it. Okay, and, sorry.
It's based out here in Philly. The CEO's already bought a company public, founded it and sold it for 5x sales back about 15 years ago, 20 years ago. And he's on his second iteration of this. I would assume the company has a very good shot of being acquired in the next 3 to 4 years, in my opinion. If it doesn't, it's growing in the 20% range. They've been burning cash forever, but they've made two promises to investors this year, and they reiterated those targets a couple of weeks ago at an investor conference, where they said, we reiterate our year's 85 to 88 million or $89 million revenue target, which is like mid 20% organic revenue growth. And they reiterated that their balance sheet has enough cash on it to get them to cash flow positive crossover. And if they do those two things, the stock will double or triple within 12 months. Now, the question is, what's their credibility level?
I was just about to ask. How have they done that in the past?
Terribly. They said the same thing this time last year. And 6 months later, they shit the bed, and I used the S word on purpose. I don't want to say poop to bed because that's too nice for these guys.
Well, now we're going to get audited on Twitter or on YouTube, and we won't get any viewers.
Thanks.
Okay. They pooped the bed the worst way possible with a massive miss. The stock probably went down 30% that day. It was such an ugly miss. And because it's burning through a lot of cash, when they miss that badly, there are questions about do they need to sell stock again and dilute again, right? So I got in. If I was pitched the stock at 6 last year because of the product and the IP, and I didn't bite because it was way too expensive. And then it was 3, and the guy pitched it again, and I still didn't bite. But at a buck 50, I started circling, and at about a buck 35, I bought my first stock and bought it down to $1. So I have a small position. It's not, a particularly big position. I consider this to be sized as a lottery ticket for me, which is 6 figures, but low 6 figures in dollars, not shares. And I'm gonna, see what happens. I had a call with the management, and it did not go well. I told them the truth about how badly they sucked, and they've been reluctant to answer my calls or emails since. Although the guy that pitched it to me has been very good with management, and he got a hold of the company, and they wouldn't. They said they're in their quiet period. They can't comment on the presentation. I forget it was like Piper or some very small brokerage firm that they presented at a couple of weeks ago. But I can't imagine they lie to people and reiterate the party line if they have no shot of delivering what they said. You know, because they did that once before, and they got
Right.
blown up terribly, and the CEO's job is at risk. So I'm placing a lot of emphasis on 70% EV to sales for a 70% gross margin business growing 20% organically. They do have to invest very heavily to grow because they're converting a new product. They're trying to disrupt the hernia patch market, and that's there's 2 or 3 players in there that big. They bundle their products with other products to the hospital chains. It's not easy. It's not cheap to grow this business.
Is there some
So,
competitive advantage to theirs? Do they got a better mousetrap?
well, I mean, in theory, they do, but it's only been around for 7 or 8 years, and there's only been 100,000 implantations by the end of next year, maybe 70 or 80,000. But the data so far has been solid. The 100% plastic ones have had issues and are settling lawsuits. The standard of care right now, the companies that make the products that have settled billion-dollar lawsuits admit the product's faulty. So yeah, anything's better than a product that you sell. You're going to be sued.
Right.
That's the competition. That's why I thought this was worth a lottery ticket. You know, but the big Bard. I think Bard owns and Johnson own a lot of companies. Big companies have these products, and they're making it very hard and expensive for these guys to grow. So it's a
Yeah.
race against time. Them not having to sell any more stock at a terrible price and dilute. They did hire a hotshot guy from Abiomed who killed it at Abiomed. He's rich. He doesn't need money. He doesn't need hassle. He lives in Boston. I don't know if he's commuting or he's moving to Philly. He's a younger guy. He's supposed to be a superstar, and he's the new president. And he's there to take over the CEO job, in my opinion. So if the CEO doesn't cut it, I would love if these guys. This is a win-win situation. If they stink on the next quarter and the stock goes down, the CEO will be out, and we'll get my guy in as CEO from president. If they make the numbers, the stock goes up. So I can't imagine, and I'm placing a lot of faith in the due diligence of Jeffrey Blizzard, the new president, because I watched his career at Abiomed, having been an Abiomed shareholder, and I thought the guy was excellent. So that's the update.
How long
on
has
that
he been in the chair, Robert?
one. Maybe 3 or 4 months. And he made it a point to say he met every single salesperson in the field in those first few months.
And has he already had a quarter in which he was the CEO and they reported?
No, he's the president,
A president. Okay.
not the
Got it.
CEO. The CEO is the same guy that's been the CEO all along.
Got it. All right.
Yes, he was there. He was there for like a month before they closed the books on a quarter, and he did speak on the call, but he's not responsible for numbers yet.
Right.
I've been in sales my whole life in some shape or form because as a portfolio manager and a hedge fund manager, you're always selling your product, right? And
Yeah.
your skill. And I know that when a new sales manager and or president come to a new company, that lights a fire under the existing sales force. So I'm
Sure.
hopeful that these guys are working harder than they ever worked to impress the new sales boss because he's responsible for sales. He's president, but he's also responsible for sales.
Okay. So next catalyst, I assume, is their next earnings report, which will probably be in what, 6 weeks?
Yep.
4 to 6 weeks?
Stock's acting very badly. The body language, people are selling way more than they're buying. The stock got to two. It fell back to $1.50, $1.45. So I have to admit I'm worried about the numbers because the stock is telling me to worry. But I have no reason to believe that the numbers should be bad from any contact or any body language from the company. That said, I have very little of that. So I don't have a good foundation to make that claim. But it's a very cheap stock.
Okay.
There's a new there's a new president and CEO in the wings, CEO in waiting, and I think it's win-win as long as these guys don't have to sell stock at $1 to stay afloat another 6 months until they get cash
Right.
upon. Yep.
All right. So if you don't own it, size it like a lottery ticket. That's what it is.
If I didn't
wait
own a share,
6
I'd be
weeks.
buying some. I'd be buying some here for sure. Right here, right.
Yep.
Yeah.
Okay.
Second
Maris,
one.
do you follow this? Do you follow this product? The product set?
No.
Do you know anything about this?
I know nothing about it, but I do own a little bit of it because of Robert's recommendation.
Okay. And what's your basis? How have you been doing?
I don't
Treading water.
I don't have it open, but I think we're flat right now. So
Okay. Yeah, that sounds about right.
So
It sounds about right from where he last pitched it.
Yep.
All right. There was one more stock you wanted to update us on?
Yeah, I had done a piece. This is brief too. Tetra Technologies is the company that is an
They're
energy
cleaning the
source.
water for the oil companies.
Yes, they're cleaning water for oil companies and are making electrolytes for EOS batteries, and both of those businesses combined. So they had an analyst day on Thursday. They're doing 600 million in it's TTI is the ticker. They're doing 615 million in sales this year. They put a target up of 1.25 billion, 100% in 5 years, and they put a tripling in EBITDA to 300 million in the target, and they put 150 million dollars in free cash flow on a 750 million dollar market cap today. So that's a 20% free cash flow yield, but it's 2030. So the market won't discount that till 2029, right? But the growth opportunities are very significant. Their core business is going to grow 5 to 7%. So they don't have bad businesses. They do have $100 million business in the 600 that they're going to sell. It's a very poor business. So the real base is 500 million in sales that they're going to be starting from next year, and they're going to more than double the business. So if they come anywhere close to those financial targets, the peers trade for 12 to 15 times EBITDA. So if you give them 11, it's like $20 stock in 3 years. So it stocks. I started buying it in the high fours. My average cost is 5. It's small, but it's a normal position, but on the smaller side. And I'm very excited about 20.
And how's their balance sheet?
Balance sheet
okay?
Yeah, that's one-time EBITDA, which for an energy service company, that's not bad at all.
Okay, and not crazy over leveraged, generating cash.
Generating cash. They're positive cash flow this year. 50 million, but they're going to triple it. So
okay,
it's a good little company. If they didn't have these two innovative growth, businesses that are starting up from zero, that are penciled in for 5 to 700 million in sales in 5 years, it wouldn't be a story I would own.
Yeah.
But
I've got my team in the Bakken looking into this too to see if this is something we can't use. We've got a facility up there cleaning water for the oil companies.
I spent an hour with the CFO going through the IP, and
Yep.
how they win because they're small companies now entering very large markets with much better heeled competitors. And I'm pretty comfortable that if this scales, it'll ramp. The water treatment in particular will ramp very significantly, very quickly, and be a very big business because the in the Permian there's a real big problem, not just with earthquakes now, but water is seeping out of bad water is seeping out of the disposal wells and causing major problems with
Yep.
the terrain in many parts of Texas now. They've just overfilled the ground with this toxic produced water. Yep.
Yep. Yep. All the wells are full up, so you can't stuff any more water 5,000
Yep.
feet underground.
Yep.
It's too bad. All right. Well, this is a good one to keep your eye on. We will do that. Let's transition over to Mr. Maris. Good morning. And
Good morning.
what's on your mind today? I heard some looming October 1st pharma tariffs are hanging over everybody's head.
Yeah, so if you're building something in the U.S., you're probably okay. But guess what? No, you're not. You're now going to get a 15% tariff, or maybe not. It's still it's still up in the air. So it's too big and wealthy of an industry that it shouldn't be tariffed. But it's too big a wealthy and well organized an industry that's going to actually get tariffed. So we'll see. The talk today is but now med devices are on the chopping block. So we'll see. It doesn't seem like the market's caring. We're going to go into a little bit of the market stuff, but first, the news today: Emma Walmsley, very prominent CEO of Glaxo GSK, is out. So it was announced today that she's out. And now imagine you have a business that you hire someone to run and you say, look, I need you to make this more valuable each year because that's really what we want you to do. And 8 years later, the business is worth the same exact amount, but you've paid this person something like $60 million straight out. Now, there's probably lots of other perks that we don't see. And in the meantime, that person has flown around on your private jet and has wined and dined everywhere that you can imagine, pretty much spending anything they want, anywhere they want. So,
and what do they have to show for it?
I want to put my resume in for the job because I have the same like background as she had, right? She wasn't even in the medical business, I think, wasn't she?
No. Yeah, exactly. And so then if you look at kind of, let me see where I've put this chart, but you pick up, the stock has actually done nothing since she's been on board. Now, if you go 7 years or 8, like if you give her the first year, you don't count the return because she has to clean up things and whatever. The stock's actually down, which is surprising. So it's really hard to do these things. So the stock's actually down. But now you look at some of the others, Pfizer's down way more. Well, that's not that encouraging. So the S&P since 2018, so I'm giving her kind of a year's grace or so. S&P 500 is up 136, 137%, and her stock is down. Now, okay, but let's look at like Merck is up 29%. That's still not great. It's still well below. But what gets my goat to not get deplatformed, Robert, what gets me really angry is that all this money that's being spent is all our money, right? This is half or so of half of all the sales, and more than half the profit mostly comes from these drug companies, come from U.S. consumers, from the government spending, not discretionary spending, not like you're going out and getting Botox or something like that. This is actual government paying Medicare and Medicaid. And so to have these, and so the new person coming in, GSK puts a very good transparency out and says, by the way, the new guy, he's only going to get paid $1.3 million only, except his annual bonus will be 150% of that, with a maximum of 300%. So if you make the targets that you get to set yourself, you'll get 150%. So now they'll say, oh no, the board sets those. Guess what happens? I've been on public company boards.
Yes.
The company comes and says, hey, the target we'd like to have is we'd like to have a stock that's flat for the next 5 years, just like the last person. They might not say that, but that's unless you come. But okay, the big question is, what does an investor do when they see something like this? And in healthcare, what I've seen is, generally speaking, and it's probably in all industries, the new CEO is going to want to put their thumbprint on things a year from now. The first thing they're going to do is maybe kitchen sink things, maybe not. I don't know what their messaging is going to be, but
Yep.
the stock's up 2% today, which tells you some institutional holders said, listen, we don't like her anymore. And they're kind of voting to tell the management team, hey, by the way, we like this. Do I think it's going to be a sea change? No. Do I think that she was disappointing? Yes. I think a company that size, it's hard not to be disappointing, as you're seeing with Pfizer and you're seeing with Merck and the others. It's just they're big ships to turn. So do I run out and buy GSK because the stock's done nothing? No. Is it probably a safe bet that this person's not going to do worse than the last person? Yeah, probably at this low multiple. That's not generally how I like to invest. But if someone told me that's what they were going to do, I'd say, well, my guess is that you have a better than 50% chance of being right. And this rotation, and that's what I want to get to now, is if we pull up this chart that I sent in earlier, Jen, if you have that. It's a pretty chart. Okay. So this is just, it's a lot going on here, but let's look at the shaded thing that says S&P 500. Okay. So you go, okay, now that's minus, 0.3% last week and 3 months, 7.6. But then you go to the biotech sector and you see the biotech sector has done really well versus the S&P 500 for the last 3 months. Is that going to continue? Maybe it's been underperforming for so long. So if you look year to date, the S&P, it's actually up 14% today, but or year to date today, and biotech's still lagging. So does it catch up to it? Is it riskier? Does it always, do all things always revert to a mean? No. Sometimes it goes on for years. For the last 5 years, biotech has underperformed. So I wouldn't be, take this as, oh, this is definitely what's going to happen. But we've talked for the last few weeks. Ben brought it up of like, look, healthcare has been a laggard, and it's a good place to be given that, or it seems to be a good place to be given how things have been going. I keep mentioning the XBI, which is biotech, and we've talked a little bit as a group the last couple weeks. Should you be in pharma? Should you be in other parts of healthcare? If you look at healthcare, which means healthcare services, if you look at pharma, those actually still lag the S&P 500. Even in the short term. So will those catch up? I don't know. That's the kind of the tariff fear. Biotech is innovation and risk off type of risk on type of environment, which we seem to be on or in, given the prospects of lower interest rates. So biotech probably still going to go. If you want to be in GSK, it's probably as ugly as all the others, but now slightly less ugly with the new CEO coming in. And what they'll do is they'll end up doing deals, and kind of the rule of thumb is, let's do a deal that's about 20% of our market cap. That won't kill us, but it will let me put my thumbprint on things, and it will take 3 years to digest.
Right.
And if it does work out, great, I can leave or do it again. If it doesn't work out, oh, guess what? I just made the $50 million or $60 million that the last person made for doing nothing. Little spicy this morning, but as I said, I was running errands all weekend.
Yeah, looks like dead money and would continue to be dead money for the
Is
foreseeable
there any growth
future.
there?
Yes.
Any revenue growth in these big drug companies? Because I buy bad businesses, but I won't buy these because there's no growth.
Yeah, they're really slow growth. That's what they've become, utilities, right? They've become, and the reason that they're doing these big deals is that they're giant utilities that are slow growth that generate tremendous amount of cash. But if they get a big hit like a Keytruda or like a Wegovy, in X number of years, that goes off patent and they have to reinvent themselves. Well, reinventing yourself with medium-sized drugs is hard enough. You have to invent things. So what they do is they scour the world to buy things, and they'll either buy things that are already successful and growing or buy things that are about to get approved. And That's why you see 40% premiums and 50% premiums or 100% premiums on some of these deals.
Yep.
Is they're just desperate. Like if someone came to you and said, I'll buy your house today for 5% more, or 20% more, you'd be like, yeah, no, I'm not going to do that. Someone all of a sudden says, I'm going to 100% more than it's worth. You'd be like, yeah, okay, I'll move next door. And that's essentially what these biotech companies are. They know. I spoke to one who sold 3 different companies, and he said, I'm going to keep doing this because I know that they are desperate to buy innovative things. All I have to do is find something that's going to work. And that sounds impossible, but I don't know. He's had a good hand at it.
All right. Well, I don't know what to do with this whole healthcare sector as a whole. Having this in my portfolio has just been hard to watch. It's just dead money.
So of the biotechs that I own, I'll go through some of them that I just
own it through the indexes. So
yeah, so the index is great if you want broad exposure. I own Zoma, which is a royalty company. Let's go down on some pharma things. I own some generic companies. Zai Labs, which is this Chinese company I've mentioned before, although they're not actually Chinese. They have exposure to the Chinese market. ZLAB is their name. Arcutis, ARQT. Oh, let's go a few. So, I mean, I have a bunch of individual names that I've talked to before. Soleno, SLNO, that I mentioned last week that I had owned for the approval, got out of because of a short report. I'm back in now. You don't want me to go through each one of these, but
no. It's all right.
So they're individual names that I like, or you could do the XBI as Ben is doing, I think.
Yeah, I think that's the better.
Healthcare stocks, really, and their medical tech devices growing 25%. So we'll see if I can get paid now.
Yeah, right. the Koru Medical, I own that with you. So, I mean, based on your recommendation. So, I shouldn't say recommendation. Based on your owning it, I've decided to.
You cannot take my sharing trades as investment advice.
That's exactly why I said what I said. I did it because you did it.
And always perform your own due diligence.
Yes.
Do you guys own? Go ahead.
I was going to say I also own WGS, which you should take a look at. But if I wanted to do more due diligence on you guys and I wanted to subscribe, how would I do that?
Subscribe to Wall Street Beats, of course, Mr. Maris.
But how would I do that? I'm going to do it.
You go to the website. Commercial. You go to the website and you select a plan. There's only 2. It's pretty simple, and follow along. And you can follow us along in real time. We have a live chat that we're talking to one another about on a daily basis, sharing ideas. So, yeah, that juice is worth the squeeze. I think we charge $100 a month, or between $100 and $200 a month, depending on the plan. Do you guys have a view on Nike tomorrow? Anyone own Nike?
I don't.
Okay.
It seems so horrible. It's weird. In the zeitgeist, it seems like it's coming back slightly. That said, I mean, you just look at a lot of professional athletes are repping New Balance and whatever on Cloud and so many other things that you really didn't see. Yeah. 10 years ago, you wouldn't have seen a professional tennis player with a New Balance T-shirt. You just wouldn't. And now a lot of them have it. So
I have an opinion on Nike because I've been shorted off and on over the last 5 years. So that tells you what my position is. Now, it's down a lot. I don't understand what people were thinking paying 50 times earnings and 8 times sales for this 3 or 4 years ago at the top. That was just stupidity in my mind. But it's come down, 60%. So maybe it's getting more interesting. But when I do what I believe is the normal,
at least time to cover the short.
Yeah, I'm not short now. I never made a lot of money because the idiots out there. I was early, so I got in and out, made a couple of points, lost a point or two. It's just, I kept trying to catch the top, but I didn't succeed. So when it finally broke, I had a very small short position, made a little money, and covered. But I didn't foresee the business getting this bad and having this bad a blow up in their earnings. So whatever they're making, it's a high PE on stated earnings, but they're under earning. We think,
Right.
and
So it's
I
even
think
higher.
I get normalized earnings at around $3, 3.5, which is what their prior peak was, maybe. So again, it's at 70, it's 25 times earnings. So I'm not a big fan of
Yeah,
paying.
I'd say let's
Well,
not try to catch this falling knife, and let's see some actual stabilization in the business. And when we start to see that, we might miss the first 10% up, but we at least know there's some foundation there to build from.
the
No.
business does seem to be improving for sure. The
Yeah.
question is at what price discount. And when it had to run to 80, I kept saying, let's get to 85 or 90, and I'm going to short it again. And then it rolled back over. So, but,
All right.
I'm still not a buyer.
Okay.
So can I mention Sam Altman?
Of course. What's on
The
your
only
mind?
reason I want to nothing's on my mind. The only reason I want to mention him is that apparently the financial press gets paid for each mention of Sam Altman because
No.
it's incredible how. Yes,
I like
let's
Sam Altman.
no, it's today on one of the channels. I won't.
So
say
they get
which
paid
one.
by Sam Altman every time you mention Sam Altman?
I don't know, but I wish there was. So I just pulled up.
Well, there's
Google
like 5
Trends.
mentions right there. We got to let them know.
We
I
want
just
money.
pulled up.
We want money.
I pulled up the Google Trends of Sam Altman mentions on Google Trends, and it has peaked recently. Early this year, it peaked in January, but there's like kind of a second peak this past week. So I don't know. Is that a sign of the market? Maybe I'll spend some time today plotting Google Trends versus tech stock prices and see if there's any correlation that should you short the index, the tech-heavy index, when there's peak Sam Altman mentions.
Well, if you want to talk about, I saw something over the weekend about a woman in the Bay Area getting paid $30,000 to name your baby.
I saw that too.
That's like, come on. You want to talk about top. We're getting pretty close if people are getting away with charging 30 grand to name your baby.
I subscribed to a guy named Ed Zitron, and he did a report and said OpenAI needs to raise like $800 billion in the next 5 years to deliver on their promise.
Yeah.
They don't even have the money. I mean, people are throwing around these big numbers, but the ability to pay for that doesn't exist today, and the business model doesn't exist today to pay for it. So it's going to be a very interesting 2 or 3 year period.
Hey, Sam Altman, how about this? Figure out a way for me to stop getting spam calls.
Right. Somebody could figure that out. That'd be glorious. And Sam, I get spam texts all the time from these random people asking me if I want to go to lunch or what did you do this weekend? It's very bizarre. Anyway,
All right.
let's wrap this up, gentlemen. Thanks for joining us on Wall Street Beats. Thank you, David Maris and Robert Marcin. Follow us on wallstreetbeats.com and at passes.com/wallstreetbeats, and we will see you tomorrow. Have a good day.
Thanks, everybody.
Thank you, gentlemen.
Sam
Altman.
Altman.
Thank you, Jen.